We watched this virus come across the world and land in New York City here at the stock exchange. The Federal Reserve looked at the situation and realized that this was way worse than the crash of 07, 08. This was a global state of devastation. People dying, mental health, whatever you want to talk about there. Companies, basically the world shut down. And so they needed to make a decision that was a really grandiose decision. And what it was they printed $3 trillion and put it into the marketplace over 3 months. That was what they felt was necessary to backstop probably the largest financial crisis and health crisis in history. We were back to even by August 12th of 2020. 07, 08, they put $800 billion in to backstop it, but it took us 9 years to get back to even. So it didn't take 9 years to get back to even. It took 3 months to get back to even. And then we were up 20% in 2020, and we were up 28% in 2021. So that kind of gives you a perspective of how, we learn from maybe from our mistakes, but we learn from past experience on how to handle these massively devastating financial crises.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC-registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
We are super thrilled to have Peter Tuchman, the Einstein of Wall Street, join us here. And so I'm one of the co-hosts, Jim Warden. I'm the Chief Investment Officer for the Wealth Consulting Group. I have here with me Tally Leger just walked in a hotel. He's actually not too far from where you're at, Peter. He's somewhere in Manhattan.
Midtown, yeah.
Tally's our chief market strategist. Jimmy Lee, our CEO, is on a plane. And my understanding, he can listen in, but I don't think he can talk much on the plane. So welcome, Peter.
Thank you. So
before we kind of get this kicked off, we wanted to show a couple of pictures, for those that are listening, we'll kind of describe it. But, Peter, this was you and me and my son, Jerem, on November, let's see, when was it? That was like November 5th, I believe. It was the day, November 6th, the day after the election. Do you remember that?
Yep, totally. Of course I do.
And so that, you and I think have been connected on LinkedIn for a while, but this is the first time we actually met. And pretty crowded day. Tally was there too. I don't know if you can see him. He might be somewhere in the background, but he was there with me too. There were a lot of people that day. Is that pretty common or uncommon? It seemed like more than normal.
No, you know what? The opening bell and the closing bell are very busy. I mean, it's been a tradition that's gone on for over 100 years that whoever rings the opening closing bell are either heads of state, prime ministers, presidents, CEOs of listed companies, CEOs and the team of new IPOs, newly listed companies, and charities. So it's a wonderful tradition. It's a very inclusive group. I've been lucky enough to actually ring the bell twice. I was part of a commercial that the stock exchange did that I was one of the creatives on it. And so I got to, after 37 years on the floor, I finally got to ring the bell. And my family came, and it was really exciting. And then I did it as part of a charity. So it's, look, everybody from Teddy Roosevelt to DJ Khaled have rang the opening or closing bell. So it's a wonderful tradition. So that was very common.
Wow.
Hey, guys.
Wow. That's very, very, very cool.
Can I just,
Tally.
I'll add, I don't know if you guys remember this, but it was an historic day that day on the exchange because it was the first day of trading after Trump won the election. And it was, the market was
after
crazy.
The election.
Yeah.
Oh, it was up 1,000. Boy, it was up 1,000. It was a huge day.
Right.
It was a big day. And I remember there was a crowd. I've been there a few times to watch Opening Bell, but it seemed like it was a little bit more crowded. And I remember talking to someone. I said, I wonder if we get to see Peter Tuchman, the Einstein of Wall Street. And then I turned around and there you were. So that was like, wow, that was pretty cool. I don't know if you heard us talking about you.
No, I didn't. You know, there are no coincidences. Obviously, it was meant to be.
Absolutely. Absolutely. There are no coincidences. I love it. Well, we want to show another picture. So we wanted to show this. And obviously for the people that are watching on YouTube, you can see this, but we're just going to describe it here. So we've got a picture of you and Paris Hilton and Jacqueline Smith, Shaquille O'Neal, James Corden, Kobe Bryant, Kate Upton, Robert Herjavec, Ben Vereen, Tony Robbins, Sean Connery.
Sean Connery, my favorite of all.
Sean Connery. That's awesome. The ultimate, 007.
That's correct. You know, look, I don't mean to interrupt you, but I've had my photo taken with so many different amazing people, whether they be celebrities or whether they're people within the finance industry or whether they're heads of state from all over the world. But I have to admit, this is a wonderful grouping. And obviously, Kobe Bryant was a meaningful person to meet. Shaquille O'Neal actually grabbed my head and kissed my head for good luck. But I have to admit, of all the people that sort of from the celebrity side, that was really one of the most exciting for me was actually was James Bond. So
James Bond.
Yeah, I mean, everybody loves James Bond, and he's just such an elegant gentleman, and it was just great to meet him.
That's awesome. That's awesome. Peter, I guess kicking this off, tell us about your journey. I mean, you were at the stock exchange during the crash of 87, and you've been there, and you've seen a lot of changes, all kinds of stuff. So tell us a bit about your background and your journey and what's exciting to you.
Absolutely. It would be my pleasure. So my name is Peter Tuchman. I'm known now as the Einstein of Wall Street. I wasn't always that way. I grew up in New York City. My parents are Holocaust survivors. They came to the United States in 1949. They were both in camps. They fell in love after the war, came to America, had just a wonderful American story. My brother and my father was a very well-known doctor. I grew up in New York City. I was a bit of a sort of an entrepreneur, a bit of a hustler, going through elementary school. It was back in the days of like the Grateful Dead. I used to sell T-shirts at all the rock and roll shows. So I was already wheeling and dealing at a young age. After I graduated high school a little bit early, I ended up going to Israel for a year after high school. And I had sort of I don't know where it moved me, but I was very interested in agriculture. So I went to Israel for a year, and I almost stayed there because I got very involved in the hybrid different vegetables. It was sort of, I don't know where it came from, but it was a fun thing for me. And I came back after that. I ended up going to the University of Massachusetts in Amherst. My first degree was in plant and soil science. It's one of the top ag schools in the country. And so I have a 2-year degree in that. And then I sort of was like, I didn't know what my future was going to be. I surely wasn't going to be a farmer. And I have an older brother who my father adopted during the war, who survived the war with my father and my grandfather. He came to America. He ended up getting into the Wall Street and became a huge corporate raider back in the 80s and became a very wealthy guy, but all about Wall Street. And so he was sort of my mentor. And, I grew up with him. He's much, much older. He's still alive. He's actually 95 years old.
Oh, wow.
But a very well-known guy in the oil business, in oil and gas, and on Wall Street. And so after a couple of years of me being a farmer, he said, enough is enough. You're going to be perfect for Wall Street. And sort of took me under his wing. And he said, that's what we're going to end up doing. But before I ended up getting to Wall Street, I graduated college. I got my second degree in finance and international business. I moved back to New York after college, and I I went to get a master's degree in business at Baruch University in New York City. In the meantime, I started trading commodities. That was my first inroad into trading. I became
Wow.
just like the Trading Place movie. Started trading orange juice futures, and I ended up doing quite well. And I was 21 years old, and I turned $1,500 into $45,000. And back
Oh,
then,
wow.
this was 1980. That was a big deal, but unfortunately, I lost it all in 2 days. So that was sort of my inroad into trading for a while. Then, so I was in the meantime, I ended up opening up a record store in Greenwich Village. That was the 70s and the 80s. So it was a little bit of a hippie time, and so I opened up a beautiful record store in Greenwich Village that was modeled after a European record store. You had listening booths. You could listen to the music before. It was an art gallery. You had a coffee shop inside, and it became a place where all the jazz musicians. It was a jazz record store. All the jazz
Wow.
musicians used to hang out. And then in my spare time, I was actually the doorman at Studio 54. So you guys are maybe too young to know what Studio 54 was, but it was one of the hottest clubs that opened up in New York City, where all of the David Bowie and Madonna and all these people used to hang out. So already at the age of 21, I was doing so many different things. And this is like New York in the 80s, and it was pretty wild time. And after a couple of years of doing that, I ended up New York. I just needed to get out of town for a little while. I had a friend who was running a oil company in West Africa, and he was from Norway. And so I ended up hopping on a plane, and I went to, it's called the People's Republic of Benin. It's in between Nigeria and Togo. And I ended up, that was just the beginning. It was 1983. So computers were just starting to come out. And
Yeah.
I needed a job. And he said, well, if you learn how to be a computer specialist on the plane over to West Africa, I'll get you a job doing the accounting for the president of the country. It was one of these. I always was very lucky in meandering my way into some great jobs.
Wow.
And so I literally hopped on the plane with also there was a thing called Lotus 123. It was the first spreadsheet that came out with computers. I learned it on the plane. It was an 18-hour plane trip, and I ended up spending a year and a half in West Africa doing the accounting for the oil company. And after about a year and a half of that, I said, you know what? It's time to really, put on my big boy pants and get back to New York and get a real job. And so I moved back to the States. It was March of 1985, and my father was a well-known doctor. He had a patient who ran a company called Cowan and Company, which was a pretty prestigious brokerage firm on the floor of the New York Stock Exchange. So I got a summer job as a teletypist. Now you have to realize in those days there's no training for all the jobs on Wall Street, right? You could not just go to school and learn how to become a broker or somebody to have a seat on the stock exchange. You have to start at the bottom, like everybody did. It was a bit of a caste system. There were all these different levels. There were what was called a squad. A squad made $67 a week, and he wore a little blue jacket. And when, we were trading in the crowd, you'd raise your hand and you had to get the paper from the trading crowd into the booth. And this guy would come running up, and he would sort of like a schlepper in a way. And so he would take the paper to there. That was how most everybody started on Wall Street. I started as a teletypist, which meant the trades were consummated in the crowd. The report was given up over the phone by the clerk. And then he handed me the piece of paper, and I would input it into the system. And that was sort of like the ledger. It's funny. I always talk about, what we know about blockchain now, but this was the original. This was the original ledger of how these trades were transacted. Because when you were trading in a crowd, you needed to know who bought, who sold, how many shares. What was the price? What was the company? How many shares in the price? And what time it traded? And all these different factors, because back in those days, it wasn't 7 days. It took 7 days to actually do all the back office I don't really know the word, but, to exchange money. It took 7 days to actually consummate a real trade. Right. Obviously, now it's done electronically, but back then everything was done manually. So that was my first my first job. But once the minute I walked onto the floor of the New York Stock Exchange, it was the 80s. There were 8,000 people there. There were 1,366 brokers, people who had seats on the stock exchange. There was this whole support system. It was a wild and crazy place. And, it was just an adrenaline filled, super excited. I knew I had arrived. For me, I love chaos. I love excitement. I love adrenaline. The minute I walked on the floor, I knew this was going to be my career. So I stayed with it. After my summer job, I asked for a real job. I became a option clerk for Cowan and Company. And then I went on to become a retail clerk and an institutional clerk. The journey from a teletypist to having a seat on the stock exchange used to take about 13 to 15 years, right? Because it was a job nobody ever wanted to give up.
Yeah.
And there were limited brokers, right? In 1903, the stock exchange issued 1,366 seats on the stock exchange, like a taxi medallion. And the price of a seat would go up and down based on the economy, based on the market. So once you got that seat, you never let it go until you either retired or you died. So I was lucky. I was in the right place at the right time. I was good at what I did, and I got a seat within 3 years. So by April, one guy retired, one guy quit, and one guy got fired. And so people always joke that I did it so quickly. I must have I took care of all these three people, but that's not what really happened. But anyway, so by April of 1988, I had a seat on the stock exchange, which was for a 26-year-old kid. It was a hugely prestigious job. I got to sign the book that, it's kind of like Santa Claus's book. It was a very formal tradition. When you got your seat on the stock exchange, you went upstairs, your family came, the governor of the stock exchange was there, and you got to sign a book that if I pulled the pages back, it was the same book that was signed by J.P. Morgan, by Carnegie, by all the originators of the financial, and I even almost Alexander Hamilton. So it was, there's a lot of history that goes on with the stock exchange, which I embrace and I love it. I never would have thought back then that I would become the ambassador of the stock exchange. One of the historians I am now the longest standing broker on the floor of the exchange. Recently, we lost a guy named Arthur Cashin, who was the longest standing broker. Now that he's passed away, I've had a seat. I've been on the floor for 40 years, and I've had a seat for 37 years, and I'm the longest standing broker. So I would have never foreseen that back then. But because I was a wild and crazy kid, I had really long hair. I wore like silver bracelets. So I didn't know if this was going to be my journey, but it turned out to be that way. And I ended up getting a seat with Cowan and Company. I didn't stay there very long. I stayed there for another 6 or 7 years. And my journey sort of progressed. I ended up doing some convertible arbitrage for a while and risk arbitrage. I was part of a lot of the big takeover stocks, the big takeovers in the mid 80s. And what did I do after that? After Cowan? I went to a convertible arbitrage firm. And then I sort of bopped around to a number of different firms doing ADR business, a lot of foreign oil and gas stocks. And so, and I find myself here, 40 years later, having had an amazing career. It's nowhere near over. I will proceed to tell you how things have changed in the industry and how, the life and the business here has changed a lot in a post-COVID world. But that's my journey, how I got here.
That's incredible. Just what you said about the book and like how you're like the person that's been there the longest. That's fascinating. Tally, I don't know if you have any questions.
So I wanted to back up. Do you remember the first person that you had your photograph taken with at the exchange? I know your favorite, but do you remember the first?
Wow, let me think for a little while. God, that's a great question. The first sort of, I would imagine it was a celebrity. One of them may have been it. God, God, it's such a hard question. I mean, there are thousands of people who I've been photographed with. I can tell you the most exciting one of them, Sean Connery. One of them was Robert Downey Jr., the actor. Obviously, Paris Hilton was super exciting. Who else? Donny Osmond. I mean,
Oh, yeah.
I mean, I think one of the most exciting was Jack Ma. So I was actually on the
Oh,
floor.
wow.
I was on the floor when Alibaba went public. One of the things that I specialize in is IPOs, and so I've stood next to the process on the floor of the exchange. The price discovery process of actually when companies go public is something that the New York Stock Exchange does better than any other institution in the world. Obviously, NASDAQ, which is the other platform that does IPOs, is all electronic. So the human element of the NYSE from an IPO perspective is so exciting. It takes hours and hours, the journey that a company goes from the idea and a couple of guys or girls in a garage and how they make their way through the whole thing, and then they finally decide to go public, right? And they have to go around the country and sell shares of stock, and then they end up on the floor of the exchange and all the formalities around that, and then you're bringing the stock to the public. And so how the brokers and our customers are there to price the stock from a public's perspective, so that takes many hours. So I've stood next to, Jack Dorsey when Twitter went public, or oh my God, what was his name? He was just here the other day. Danny Meyer when Shake Shack went public. He was actually
Wow.
he was just here celebrating the 20th anniversary. Or Jack Ma, or the guys from GoDaddy, or the guys from Party City. I mean, some of the great companies, LinkedIn, for instance. There were some Uber. I stood next to what's his name? Saka, when Uber went public, there were obviously the CEO was there, but a lot of the early investors, the guys who
Wow.
bought into Uber when it was a $3 million valuation. So that was always a very exciting thing. You're going to tally now. You're going to torture me because I'm going to have to go back. what was actually the first person I took a picture with?
Well, Peter, here's another one.
So I got to,
Oh,
go ahead, Tally.
Well,
No, I was just going to say, with all your experience, Peter, like the crash of 87, you had like the long-term capital management, the financial crisis, what was the scariest time to be on the floor where it was just like, oh my gosh, the sky is falling?
So, look, I love the question. Thank you for that one. So I've been around. Some people say I was here for, we always joke that I've been around for 137 years, and I was here. I went to high school with Alexander Hamilton. He's buried across the street, and I'm still here. Not true. I was also not here for the crash of 1929. So let's be clear about that. But I was here for the crash of 87. I was here for the for the internet bubble of 2000. I was here for the financial crisis of 07, the great financial crisis. Obviously, I was here for COVID. And I've been here, ever since. So each one of these crises, I don't use the word crash or crisis very lightly, right? In this world, a sell-off of a couple thousand. Look, this morning, after Mr. Trump announced that we were going to have a 25% tariff on China and Canada and Mexico, the market opened down almost 1,000 points this morning. In our new world that we live in, 1,000-point sell-off is no longer a crash, right? So yeah. I need to put that in perspective. But each one of the crises has had different components that made them what they are, right? And so, there are a number of things. Look, the crash of 87 is still the largest percentage loss in any given day. And I was a newcomer there. I had only been there a few years. I was still a clerk. And I think from a like a fear and loathing perspective, I think that was probably, that and COVID, right? COVID for the fact I'll go to COVID in a minute, but the crash of 87, there were stocks. I was a clerk and I was trading and I was still a bit of a newcomer. And so we were trading stocks like digital equipment. That stock opened that day, that Monday, Black Monday, at $168, and it closed at $60. So you have to realize stocks, when markets are crashing, there are the brokers who are executing stock, and there are the market makers who have to create a smooth and active market. And when stocks are going nothing but down, the market makers have to buy those stocks. And so that night, at the end of that day, just like the funny scene in Trading Places, at the end of the day, there's a margin call. Everybody has to be able to support all of their acquisitions in cash by the end of the close of business that day. So you have to realize that those guys were buying thousands and tens of thousands and perhaps millions of shares of stock all the way down, and the number of firms went bankrupt that night, right? So there was a lot of anxiety around that. I just remember it was just like there was fury and fear around that, because still it was like, I think we actually lost 39%, within different numbers prospectively, but 39%, I believe that's the number, I may be wrong, of the actual value of the marketplace, and which was quite devastating. So there was a lot of fear, a lot of anxiety, and you really didn't know what the next day would bring, right? And whether we'd be there still. And that the guy who you were trading with was still going to be in business that next day. So in that way, that was a really anxious day to be at the stock market. The bubble of 2000 was, I don't really remember it that well. I don't remember in 2000, it was not something. I was doing convertible arbitrage, so I was not really involved in a lot of the tech names. So you realize the New York Stock Exchange, we have about 3,300 stocks that are listed there, right? NASDAQ has most of NASDAQ Marketplace is in Times Square, and that's where most of the tech names are traded. Google and Netflix and Facebook and those names, and Apple. And obviously the bubble of 2000 was a very tech-heavy bubble. And so we don't trade those names here in New York at the NYSE, right? We trade all the other names. And so so I was not that involved emotionally to the bubble of the 2000 internet crash. But 2007 was very significant for me because, you realize that so many people were going out of business. Look, that was a longer crash. Crash of 87 happened over a couple of days. But the whole crash of 2007, 2008, right? And AIG going bankrupt, General Motors going bankrupt. The meetings that the Federal Reserve had with Merrill Lynch and Smith Barney, those nights they were all up all night trying to who to decide who they were going to save and who they were not going to save. And then that next day, when you saw people from Lehman Brothers walking down the street with their boxes of all their belongings because they had they had been laid off because Lehman Brothers went belly up, right? So in that way, that was a longer, much more painful experience. So that was the financial crisis. And you also got a sense that things were, that we were all in trouble, right? The whole nature, people should really read up about the crash of the great financial crisis, because it was all about predatory lending. It was basically about, the big guys, selling credit and houses to people who could not afford it, right? And then, promising them that they would be able to sell it at a profit. And then that was not the case. And then there was this prolonged journey of all the big banks packaging these bad mortgages and selling them for 20 cents on the dollar all the way down the road. So that was a crash that had totally different components to it. It was a way longer and more painful situation. It took, and this is a good perspective of what's going on, so the Federal Reserve, which obviously came to the aid of those companies that went belly up, right? We lost a number of brokerage firms. I mean, think about it: Smith Barney, Merrill Lynch. Some had to merge, some went under. But it's the Federal Reserve, which has the tool to create stimulus and print money to bail out companies. They bailed out AIG, the largest insurance company in the world. They bailed out General Motors, right? But they threw $800 billion into the market to support to support the market and these companies going belly up from crashing, right? Yes, it was less of a crash and more of a long-term crisis, right? So
Mm-hmm.
this is, I'm going to tell you another story. $800 billion was put in to the marketplace over a year and a half to basically backstop the financial destruction of the market and Morgan Stanley and all the mortgage companies that were going under and General Motors, AIG, and the brokerage firms. So it took 9 years for the market to get back to even after the great financial crisis. 07, 08, they put $800 billion in to backstop it, but it took us 9 years to get back to even. So that was very painful on a long-term basis. When COVID came along to go to the next crash or crisis, obviously there was that physical health component of it, which was quite devastating, right? I mean, we were looking around the room. The market opened and closed many, multiple times because we went through all the circuit breakers. That was the big deal. The market went from February 12th of 2020 to March 23rd. It was a 6-week sell-off that was massive. 10,000 points on the Dow, double digits, 30-40% on the S&P and whatnot. And so and then you were also, the stock exchange is a very personal place, right? It's a very humanistic place. So everybody knows each other. We know each other for a long time. And so
Sure.
to look at each other's eyes and to think, how are your parents? How are your grandparents? How are you going to have to move them from a nursing home? Blah, blah, blah. I actually was patient zero. On March 15th, 2020, I got COVID. I got meningitis. I was given 2 weeks to live. At one point, I lost a big part of my left lung. So, I mean, I had 103.7 for almost 8 weeks. So I was completely and literally almost lost my life. So for me, COVID was a life-changing, devastating experience. But from a financial point of view, the Federal Reserve had to step in. So think about it. We had no frame of reference. We knew about crashes and crises, but we knew nothing about a pandemic and people dying in the streets in New York City, right? I mean, 900 people were dying a day on the streets of New York City. And we watched this virus come across the world and land in New York City here at the stock exchange. We ended up closing. But from a financial point of view, the Federal Reserve looked at the situation and realized that this was way worse than the crash of 07, 08. This was a global state of devastation. People dying, mental health, whatever you want to talk about there. Companies, basically the world shut down. And so they needed to make a decision that was a really grandiose decision. And what it was they printed $3 trillion and put it into the marketplace over 3 months. That was what they felt was necessary to backstop probably the largest financial crisis and health crisis in history. And I'm a firm believer, whether one likes Jay Powell or not, I believe if he had not done that, this is not political, if he had not done that, we would all be standing on bread lines today, right? I believe that was so necessary. Now, the whole point of this story is that we were back to even. So that was March 23rd, 2020. $3 trillion into the market over 3 months. We were back to even by August 12th of 2020. So it didn't take 9 years to get back to even. It took 3 months to get back to even. And then we were up 20% in 2020, and we were up 28% in 2021. So that kind of gives you a perspective of how, we learn from maybe from our mistakes, but we learn from past experience on how to handle these massively devastating financial crises. But so there's my story about the role I played in all of these crashes.
That's incredible. So you've seen a lot, Peter.
I have seen a lot.
So I can attest to your story about Lehman Brothers because I was there. It was an exciting time. Yeah. So I went down with the ship, and then Barclays bought us, and we were told to come back into the office.
Yeah.
in the space of a week. So, but the question I wanted to ask you And this is kind of a comparison of today versus back then in the 80s. So just for context, Jim and I, we've all been to the NASDAQ and the NYSE sites to ring the bell, as you know. But every time I go to the NYSE, I'm kind of struck by how empty it is, except for the media that you go and see, and we do our segments. Does that throw you off now a little bit still to this day when you think back to how busy and how many people there were actually on the exchange back in the 80s compared to now?
Well, so from my perspective, for people who actually work here and are still very busy, it doesn't look empty at all. From your guys' perspective, all you saw was like, a place that was foreign to you coming into, and there were hundreds of people screaming and yelling. Is it disappointing for me that we don't have open outcry and that there are not 1,000, 8,000 people in the room? Absolutely. But, look, every industry has gone through the growing pains of injecting technology into their business, right? I think we've actually done a pretty good job by not outsourcing humans as much as some other industries have, right? And that even though from your perspective it looks quiet, and it is, right? I kind of try and resist it because for me, there's a part of my heart that's sad that we're not doing it the way we used to do it. But in the nooks and crannies of the room that you come to when you're the opening is actually a lot of people doing a lot of business. I've actually just had 2024 was my busiest year in 40 years of doing business. So my firm belief is that the human element in this marketplace is more important than it ever was before. It's less apparent by the fact that they were 8,000 people, now there's 700. But the human element in a market that's so volatile and so crazy with the technology and all that, the human element is more relevant and more important than ever before. But of course, I know what you mean. And look, there's a part of my look, I was the last broker to go from paper, a pad in my hand, to that handheld computer that we're forced to use now. I literally was the last guy. They said to me on Friday, if you don't put down that pad and pick up the handheld. Back then, the first technology we had was it was like a Palm Pilot. You probably remember one of the first. Well, but even before an iPhone was a Palm Pilot. You held it in your and you had a little bit of a stylus, and you used to, hit the machine. That was our first use of technology as a trading faculty there. So they said to me on Friday night, Pete, we know that you're having trouble because I'm technologically compromised. I don't even own a computer. I hate all that stuff. I like people. I like paper. I like the adrenaline of screaming and yelling. That's my nature, right? So they literally said, Pete, we get it. We know who you are. But if you don't throw down the pad and pick up the computer, you're out of business on Monday. And so I was forced to transition. But I literally was the last guy at the end of the line who just refused to give up the ship. Right. So, I loved that human interaction. I loved screaming and yelling and open outcry. For me, that really is something I thrive for. And so what I've done to preserve that feeling, because it's a feeling. Besides the actual population, it's a feeling that, two human beings. Look, for us, when you all come down for the opening bell, we love that because you can hear that the more people show up for the bell, you can hear the energy change as the noise, as people talk. And so you get a little bit of a sense of what it was like back in the day when there were thousands of people in the room. But so what I've done is I've sort of pivoted my career and I'm doing a lot of other things. So I do actively trade. I built a trading strategy about 18 years ago around the what's called market on close imbalances, which is a sort of something the stock exchange offers us access to see some order flow. And so I built a strategy about 18 years ago, which I've been using with a couple of customers for many, many years. I've hired my son out of college. He is my partner. He helps run my firm. We are the last father and son team on the floor of the stock exchange. Historically, it was all families. It was Irish, Italian, and Jewish families. Your grandfather worked there. Your uncle worked there. You got a summer job, and then you stayed and you grew with the family. So that's been a big part of it. So I keep that part of it alive. I've also committed myself during COVID when 2020 came along and they brought Webull and Robinhood, right? The new free trading apps. And they sort of made the market accessible to the general Joe and Jane who were now, were not accredited investors in the past, right? Everybody now with an iPhone and $100 could actually have access to the market. Right? That came along in 2020. And so they were all invited to this party. But what they didn't offer them was the education on how to trade. Right? Everybody came in thinking it was a get rich quick scheme and that, they came in during COVID. Everybody had a couple dollars from their stimulus. Everyone was sheltered in place at home. They were watching the internet with the meme stock phenomenon, Rory Kitty and all that craziness. And so me and my partner, a guy who I started on Wall Street in 1985, saw the opportunity to educate all these 40 million new retail traders and investors came into the market in March of 2020. And so my partner and I, his name is David Green, he started on Wall Street as a squad. I was a teletypist, and he went on to become a market maker in some of the biggest stocks on Wall Street. He retired at the age of 38 when Goldman Sachs was bought out Spear Leeds, one of the market making firms on the floor. I'm sure you remember that you were maybe around for that or not, but that was one of the worst deals ever in history. They paid $4 billion for that market making firm, and 2 years later they sold it for $250 million. Anyway, so I've committed myself to, we built a trading academy to teach young retail traders how to, using technical analysis, how to trade the market. And so he and I built a course. It's 21 hours, 21 videos. We coach and mentor all the students live every Thursday night. We have thousands of students all over the world. And the course is really quite something. We spend a lot of time doing it. And so I've committed myself to, this is the next generation of the trading and investing community, right? And while a lot of the people in my business don't necessarily embrace these young traders, they think they're a little bit gangster, the guys who were Reddit and trading, GameStop and all that kind of stuff. For me, I looked at reality and I said, these guys are going to be the next generation of investors. And it's my responsibility to educate them. And so we built this course and we do live master classes every month. We have this academy that we have where we coach and mentor thousands of students. And so that's my way of bringing a lot more people into the industry. The other thing I do is I have a huge social media platform. I do motivational speaking all over the world. I have 2 YouTube channels and 2 podcasts. I just did a show yesterday called Going Public. It's for Twitter. Twitter just launched a new platform. Elon Musk is trying to go up against YouTube. So they launched a new platform called Twitter Streaming. And the first show to go on it, second show actually, is a show called Going Public, which tracks the journey of startups from the garage until they actually come down to the floor of the stock exchange. And it's a very cool show. I'm the new host. And what's cool about it is they got clearance from FINRA, the regulators, that while you're watching it, you can actually, if you like the company, what you see, you can actually buy insider stock while you're watching the show. So you can actually invest in these startups on the inside, which was never available to the regular, retail investor. So I've done so many different things to try and, bring more people into this, escalate my visibility. I'm the best, the biggest known broker in the world. So I built this fun brand called the Einstein of Wall Street, which I love. And so I have a lot of fun doing it. And in the meantime, I get to educate everybody about trading.
So that is like super amazing. All your experiences there. So my question, I guess, for all these newer investors, younger investors, my son being one of them, by the way, his first investment was Nvidia. And then he thinks that, it's going to go up, 30% a month or something like that. So I have to educate him. But yes. When they're coming to you and they're doing this, what is the biggest thing the biggest takeaway? I mean, do they think that that it's super easy, like the GameStop and the AMC? I mean, what is it? What would you say the biggest takeaway is, the aha moment for these younger investors coming in, that it's not as easy as it looks? Or
So look, they came in at a time where it really was cowboys and Indians, right? As I said, it was just it literally happened in this little window of time when from March 20th, everyone literally was locked in their apartments. They just got a stimulus check for a couple $1,000s. GameStop and all those stocks were going wild, right? Reddit and Twitter stream and space and all that stuff were happening, and the market going wild. And so the only perspective they have is the market, stocks going from 2 to 450 and back to 3. And one of the things that's unfortunate is that they think this is gambling. They think it's a get rich quick scheme. Look at it from their perspective, they're literally throwing a dart at a wall, or they're listening to some guy in the Uncle Herbie on the internet telling them what to do. And so I'm trying desperately to look. They all thought that every stock was going to the moon, right? That was the emoji of the spaceship going to the moon.
Sure.
Right? They bought, it was this, the meme phenomenon is what it's called, literally, where all these stocks went, it was it was disruptive in very many ways, right? And people watch stocks go up thousands of %. And, many stocks guy call them, they got memeified, right? And what people didn't realize was stocks go up and they go down. Nobody got broke. Nobody gets broke taking a profit. You cannot buy a stock at 2, watch it go to 450, think it's going to 1,000, turn around and watch it go right back to 2, and you not realize that you just left a lot of money on the table. It was curious because they're in it for the thrill, in a way.
Yeah.
And so what I tried to do was said, yes, if you want to be in it for the thrill, that's all fine and good. But there's another component to this, which is investing in your future. One of the things that I do when I talk to young people, I speak in colleges all over the world. I talk to high schools. I try and get out the message that, to invest in stocks and not stuff, right? We have the young people today are the largest consumer generation of all time, right? Think about it. You're on Instagram, you see something you like, you have to own it. Right? You pay 3 times what it cost to have it delivered yesterday. And it's all about, I want what I want when I want it. Right? And at the end of the day, it would make so much more sense to not have all this stuff in my closet that has absolutely no value. The minute I buy it, it goes down in value. And to have that mindset that if you put I've heard a birdie say, if you put $250 a month into the S&P 500 at the age of 18, that at the age of 60, you'll have more than $1 million of passive income. Now that's, the 60-year-old part is not sexy, but the $1 million is pretty sexy. And so I try and get that point across that, that this is a mindset. It's investing in your future. There's a lot more to it. This may not be everybody's career, but that everybody, I think if we all would like to talk to our 18-year-old selves, is I wish I didn't spend all that money on whatever, and I started buying little bits of stocks and stuff, right? If I like Shake Shack hamburgers, I should maybe buy some Shake Shack stock. If I like Starbucks coffee, maybe I should buy some Starbucks stock, and and create that kind of a mindset, right? Which is what I try and do, molding them to think this is not about getting rich quick, but it's having some fun, creating disposable income, and building a portfolio. Because at the end of the day, it's not Las Vegas.
That is so true. Well, and it's about investing rather than consuming. Correct. So much of what we're taught, I feel like we're programmed consume, consume. Not just for the young people, even people our age. Like you got to consume. So you work with your son. How long have you been working with your son? That's awesome.
So my son now is 31 years old. He went to Bentley College. He got a degree in finance. He always wanted to work on the floor of the stock exchange. When he was a young kid, he would take every opportunity to come down and visit me. He used to come down here wearing those little things called Heelys, these little like rollers.
Yeah.
And the floor of the stock exchange is all wood. And we used to have there were used to be 5 rooms on the stock exchange floor. And there used to be these ramps. And so as a 6, 7-year-old, he would be rolling around like it was a roller skating ring. So he always wanted to work with me. And as I said, historically, Wall Street used to be all families. So, for a while I was upset because it did not look like, that maybe that the floor of the exchange was not going to still be here after, all this time. And when it became clear that they were going to reinvest in the floor of the NYSE, when Jeff Sprecher came along, and that they were going to rebuild the floor and really make it a viable force with new IPOs and SPACs and and ETFs and all that stuff, that I took the opportunity. So he got his first job wasn't with me out of college, but he was on the floor of the exchange. And then I saw that he was really good at what he did. He's a really good trader, and he's a really disciplined kid. It's funny because he's 6'3". Nobody believes he's mine. He's a huge 6'3" guy and who plays basketball. I always joke that I used to be 6'3" before the accident, but it's not true. But so he's my partner. He basically runs the company. And there was a period of time when I got sick with COVID where I really could not. I mean, I was out. I've had 7 surgeries on my neck. Right, my whole neck is fused with titanium. So I've had a really hard time. And unfortunately, last year I lost my wife died of cancer. So I've had
sorry to hear that.
I appreciate it. And hard for both of them. And I have a daughter as well. But so all that time he stepped in and he ran the firm. He ran the company. And so I love that part of it, that I'll be able to have a legacy on the floor. And he loves it. He loves everything about it. And that was always my dream. There's nothing better than working with your kid.
Oh, absolutely. Well, my daughter is helping to produce this, so she's working with me too.
Great. I love it.
Well, I only have one other question. I don't know, Tally, if you've got any other questions for Peter.
No, I'm good. Take it away.
So my final question, by the way, we appreciate your time so much. So my last question, I saw something in the Wall Street Journal not that long ago that said that there's more trading off of the exchange and dark pools than is on the exchanges. And I don't know, that just made me feel a little bit unsettled about liquidity and like price discovery. Like, is that something that you guys talk about? I feel like, if too much of that happens, people might get burned and then they'll come back to the exchanges. What do you think?
You know what? It's hard. Look, the whole story about dark pools is it's a little bit questionable. So look, there are in the 70s, 60s, 70s, 80s, I think probably into the 90s, we used to do about 80 or 90% of all the global volume, surely the domestic volume at the stuff of stocks trading. And that was just, it was a matter of regulation, right? You had to either trade on the New York Stock Exchange or on NASDAQ. There was also a thing called the third market, right? It was actually Bernie Madoff, to be perfectly honest. There was over the counter, and Bernie Madoff bought the Pacific Stock Exchange. And he actually, before he became a bad guy, he wasn't such a bad guy. I actually did business with him. He used to run the Pacific Stock Exchange and the Midwest Stock Exchange. So they're within restricted regulation. There were very places outside of the NYSE where you could trade. I'm not really sure when it happens, but they basically changed the regulation, and basically anybody, any platform. I guess it probably came along with technology, but anybody with a computer could really set up a marketplace. I'm sure there's more rules than just that, right? But you have a platform, and I'm sure you have to follow certain rules under the regulations of the of FINRA and the whatever it is, right? Then you have buyers and sellers. You can create a marketplace. Now, you have a picture in your mind that the dark pool are a bunch of people in robes with pointed hats, trying to screw over, excuse my language, the retail and the institutional investor. I don't think that really happens. It turns out that, so let's look at it like this. So very often in this world, a lot of the bigger players. So in the old days, before all technology became part of the trading world, right? Everything was done human to human. And there used to be these things called crosses, right? If I have a choice, I have 100,000 shares of IBM to buy. I can, and I am a portfolio manager for Smith Barney, right? And I give my order down to the floor of the stock exchange and I enter it into the marketplace. My broker goes out to the market maker and he says, "Hey, Jimmy, how is it?" And he'll say, "Well, Peter, we've got two sellers at 62 and a half, and we got two buyers at 62 and a quarter." And I'll say to him, "Okay, I'd like to buy 50,000 shares in here, and I'd like to work the rest of it." That's old school Wall Street. Okay, there back in the old days, a brokerage firm would always try. Now think about it. A brokerage firm has $100 million under management, $10 billion under management. They've got a lot of people who own shares of a lot of different stocks. And the ultimate thing for a brokerage firm to do is to internalize order flow. So if I have a
Sure.
if I have 100,000 shares of IBM to buy for a customer, ideally as a brokerage firm, I would like to see if anyone within my company has 100,000 shares to sell, right?
Mm-hmm.
Called a cross. And in the old days, so then you actually have a whole desk in each brokerage firm that is called the crossing desk. That whenever I have a buy order, now think about it, it's a financial decision and it has a lot of different components to it, right? So if I go out to buy stock, I actually have to pay for the execution. If I internalize it, I'm actually writing a ticket on both sides, right? I make a commission on both sides, right?
Mm-hmm.
That's a good thing. That's how we internalize stock, and it's called a block trade. Okay. Okay. In an electronic marketplace, there's so many different nooks and crannies, right? You can trade in fractional pennies. If I'm in the marketplace and if I have 100,000 shares of IBM to sell and I put it in the system in an algorithm, right? I can, if I would like to, I can only display 100 shares at a time, right? If I want to be a seller and I want to sell 100,000 shares, but I don't want everybody to know I have
Sure.
100,000 shares to sell, I can just show 100 shares. And when someone buys it from me, another one pops up. Okay.
Mm-hmm.
Time someone buys one, right? So what would be the purpose of that? Well, I don't want the people. I don't want the people. We call them the rats sometimes. You don't often want, if you're a large whale, you don't want everyone in the world to know that you're a big seller in IBM or in any particular stock, because then it will make it harder for you to sell your stock, right? If everybody's out there, because everybody is trying to shop order flow, right? The firms
Sure.
are large. There's a lot of, look, the volume we're doing. We used to do 118 million shares a day. Now we're doing 4 billion shares a day.
Mm.
So there's a lot of stock. We used to have 1,800 stocks. Now there's 3,000 plus stocks, plus everything on the NASDAQ. So, we used to have just the NYSE and the NASDAQ. Now we've got what you're calling the dark pools. So the dark pools are just where order flow sits, that is a little bit dark. It's not open to the public, right? Nothing nefarious is going on
Sure.
there. So
Interesting.
I don't want you to think it's just where some insiders or there are lots of different. Sometimes it's actually a good thing. It's because if you want to find the other side to your trade and you don't want to go into the public marketplace to buy it, because very often if I have a big order to buy stock and everybody is out there seeing that I have 1 million shares to buy, well, they're all going to try and buy it up.
Sure.
And very often, it's my fiduciary responsibility to my customer to try and get them the best price I can. Now, if I can bypass all of the public markets, right, and not be doing anything wrong, but actually go try and search out, because there may be people out there who have 1 million shares of IBM to sell, and they don't want to sell partials. Or they want to sell all or none, it's called, right? There are people who want to buy 1 million, and there's someone who wants to sell 1 million. They don't want to be in there spending weeks and months trying to sell it. Every
Little
order
pieces at a time. That takes a long time, 100 shares at a time.
exactly, and also it will impact the price of the market.
Yeah.
Right. Very often everybody's order flow has a different caveat connected to it. Right. Some people want to just work the order. Some people want to buy it aggressively. Some people want to be 10% of the volume. Some people want to buy it all or none. Right. So that's where you will find the dark pools will live to facilitate some of these order flows. It's literally not a bunch of bad guys wearing Party City costumes doing some crazy stuff. It's different than that. So I would not be afraid of that. Look, there are people who probably do some nefarious stuff. We all know that in all different businesses. Look at the Sam Berkman-Fried guy. Look at how that the minute Bitcoin came popping up, there were immediately a lot of bad guys doing bad stuff. Right. So wherever you have business and money transacting, you're always going to find some bad guys. Right. But net, the dark pools are not bad places.
Well, that's good to know. Maybe they just need a new name because dark pool doesn't sound as great.
Yeah, it's very possible. Now, you know what? If we have a little time, I just thought it would be fun if I give everyone a really quick synopsis, if we have the time, of how we got through 2024 and where we're going in the next, in the first quarter of 2025.
Yeah, no, we love it. Let's hear it. What do you think?
Okay. So, and I'll give you the quick version. So 2020, look, I can give you the quick version from 2020 until 2025, because these are some of the most fascinating years that in my career, right? Obviously,
sure.
On February 12th, 2020, the market was trading at record highs across all indices, right? The consumer was in good shape. The bank's balance sheets were in good shape. Everybody was doing well. Then COVID came along, and obviously everything just went to hell. Excuse my language. And within 6 weeks, the market went down 10,000 points, right? Then we see the Federal Reserve came in, they stepped in, they put $3 trillion into the market over three months. And by August 12th of 2020, we were back to even, right? So that's the good news about that. The bottom line is when you print money in that kind of mass, you're going to create a lot of other things within the economy, and one of them being inflation. Right. So we were up 20% in 2020, up 28% in 2021. Those were super robust years. We came out of COVID. Economically, we were struggling, but market wise, we were doing really well. Obviously, we were still, as a nation, as a world, we were still going through it, and we were really struggling in a lot of different reasons. Right.
Sure.
No one was getting on planes, trains, and automobiles. People stopped, nobody was working anymore. You had to pay a truck driver $168 an hour to get back in his truck and work again, right? All that weird stuff that nobody wanted to work anymore. So then, what ended up happening with the printing of money in the super robust market, we created inflation, right? Everything became super expensive. And there's no one to blame about it, except that we printed money and that everyone had been locked in their house for 2 years and nobody wanted to go back to work. So everything became more expensive. Not only, look, if the person who works the chicken coop to lay to lay the eggs and do all that, it's going to cost more money. The guy, look, and you realize that when everything was shut down for 2 years, right? It's not like you can just suddenly get back online again, right? All those things take time. The guy, if you want to build a house, well, if the world's been shut down for 2 years, it takes a while. You got to go find the guys to cut the trees down and then, and do all those things. It just doesn't happen automatically. When the world goes offline for 2 years, it takes a lot to go back online. Mm-hmm. So then we're in 2022. After 2 really great years, the market was up 48% in 2 years against all odds, really, because everyone thought if the world's coming to an end, the market should probably be down, but it wasn't. And it was a function of all the money being printed and a number of other things. 2022 was a down year because of inflation, right? And so what ended up happening was the Federal Reserve, in order to take money out of the system, had to start raising interest rates, right, in order to curb inflation. So they raised interest rates 18 consecutive times in 2022, right, to sort of take money out of the money system, right, and to try and curb inflation. We came into 2023, everyone thought, and we were down double digits in 2022 as a function of all this. There's an inverse relationship, right? When you raise interest rates, it puts pressure on the market, and that's the way it is. It's Econ 101. We don't even need to overthink it, right? 2023, the market was once again in favor. We started having this huge tech boom. February 2023, NVIDIA was trading at $108. February 2024, NVIDIA was trading at $924. June of 2024, NVIDIA was trading at $1,100, split 10 for 1, and announced a $50 billion buyback. So 2023 was fueled by this amazing tech boom, right? And that was just spectacular. And we proceeded to be up double digits in 23. We came into 2024, and everyone kept saying, oh, it's not going to stay, where there's a bubble here, where there's no way this market can sustain this kind of growth. But they were wrong, right? Mainstream media tends to be wrong more often than they're right. And 2024, they decided to go up against the interest rates that were now had gone from 0 to 5.5%, right? Inflation had gone from 8%. The goal was to get down to 2. We had done a great job of getting inflation down by doing all this mechanism that the Fed does, right? By taking money out of the system and all that other stuff. We now are sitting here in the beginning of 2024 trying to decide whether we should start cutting rates, because higher rates for a long time doesn't serve anybody. But you can't just cut rates like you just can't raise rates. It's got to be done with a certain, a certain special hand. Right? It's got to be done with thought, and it's a special thing. You can't just do it, right? So 2024, against all odds, was a really challenging year in a lot of different ways. Okay, we had a couple of wars globally. We had a couple of banking crises. Right? We had a lot of every possible. There were like pebbles in the shoe, bumps in the road. There was so much stuff that could have dislocated the market rally, but it didn't happen. Right? 218 trading days in 2024. We had 58 record closes across every indices. Right? The NASDAQ went above 20,000, first time in history. The Dow went above 45,000, first time in history. S&P went above 6,100, first time in history. So against all the odds and against all this other stuff, the market in 2024 almost closed at record highs. It was a spectacular year for the market. 7 times, normally, markets go up, markets go down. Very often you're going to see a market go up, it pulls back, it goes back up. It's like the best kind of a market is one that goes up and pulls back as you're building a foundation for a higher market. There were 7 times in 2024 where the market reversed, sold off, consolidated, no crashes, right? No crashes, just pullbacks and consolidations. It only happened 7 times in 2024 where the market reversed, right? And every time it reversed, the mainstream media would start screaming and yelling, the bears are coming back.
It's the end of the world.
Right. Well, it's the end of the world. Dogs and cats living together. It's, the bubble's coming and all that kind of ridiculous talk when markets go down. And it's almost irresponsible in a way, because your layperson thinks, oh my God, I got to sell everything because
sure.
When in fact, those 7 times, I love to talk about opportunity in the market. Every one of those pullbacks was nothing more than an opportunity, right? And if one doesn't understand that when a market rolls over and pulls back, if nothing has fundamentally changed about one of those stocks that you own in your portfolio, right, then you should be looking to buy a stock at a discount and not running from the movie theater screaming fire, fire, right? Pants on fire, whatever it is. That shouldn't be the way it is, right? Talking about NVIDIA, that your daughter, is it your son?
My son, yeah.
Your son owns. NVIDIA went from 924 in March of 2024. April was a down month. We went down 8%. It came in 200 points. Everybody should have been buying it at the distance. when in fact everyone was selling it because mainstream media was telling them
It's
the game
over. Game
over.
over.
Bubble game over, when in fact that was wrong. And that happened 7 times. So April was a pullback of 7%. July was a pullback of about 9%. Every pullback turned out to be an opportunity, not an opportunity to sell, but to buy. August 5th was an extraordinary happening, which is when the Japanese stock market crashed. We had what's called a carry trade. It's way too complicated to talk now, but
Sure.
our market opened down 200. It was very similar to today when we opened down 1,000 points. That day, August 5th of 2024, the market sold off 256 points. The Japanese stock market crashed, and it was one of the bigger sell-offs that we've seen. But in retrospect, it was nothing more than a pullback. And
Sure.
we started to see that it was time to start cutting interest rates. That was what was thrown on the table. The Federal Reserve started negotiating the idea that we need to expend a bullet from our gun, cut interest rates to support the market, right? We never really got a lot of that done because the market was going up and down. It was a bit of a crazy. We had one more pullback in October, one more in November. But net, it was one of the most extraordinary years on Wall Street. We had Mr. Trump elected president. The market rallied beautifully. You were there for that day. I believe partially it was because Mr. Trump won, and partially it was the fact that that the nation was so exhausted by all the around the polarity of the election that finally they just said, thank God it's over.
Someone won. It's over.
Someone
Move on.
It's not going to take 3 months to determine who the winner is. Now let's get back to business, right? And so that worked out well, and we closed out the year right off the record close. 2025 is only 4 weeks old, and it's already showing signs of complete crazy, right? Today, for example, a couple of weeks ago, we had a big sell-off because in quantum computing, because Jensen, CEO of NVIDIA, said all this stuff, that the relationship between them and quantum computing was 30 years away. It's
30
not
years, yeah.
So that caused a bit of a sell-off. This past Monday, a company called DeepSeek came out of the woodwork claiming that they can do for $6 million what NVIDIA spends $100 billion on. Well, that threw the market to a tizzy. Today, what ended up happening, I can't even remember. What was today's sell-off?
Canada, Mexico.
Thursday, Trump, in the old days, when major information was to be disseminated, right? They used to call a news conference. Everybody was given a chance to sit down and understand the news and not throw it at the market like in a catastrophist kind of way, right? And unfortunately, one of Mr. Trump's part of him that is a wild card is he loves when he feels like he wants to say something. He says,
just tweet it.
Right. He just tweets it. And the market can handle virtually anything except that kind of dissemination of information, right? Today was he tweeted about Canada and Mexico and 25% tariff. That's major impact on the market. The market sold off 1,000 points, but by 11:30 in the morning, he decided to, maybe I was a little bit fast at the draw. You know what? Maybe I shouldn't have been so quick. Maybe we'll wait a month, and then maybe we won't do it at all, and maybe we'll negotiate. And by the end of the day, we had rallied back almost half of our losses. So I'm saying all this to say that 2025 is going to be a great year, a volatile year, right? People should look for opportunity, right? I think the market is too big to fail, right? There's always going to be doomsayers. There's always going to be the ones who are the catastrophists in the marketplace, right? But at the end of the day, I think we're doing okay. And so that's how I'll end it up.
That is perfect. And that's what we tell our advisors and our clients, that look, if you're in it for the long term, when there is a pullback or a dip, you got to be buying those dips, right? Because you don't want to just bail on it and then come back, how many months later and the market's a lot higher, right?
Hers and his Three's Company too. Come and dance on our floor. Take a step that is new.